Hey guys, Sean Pruitt here, president of Kingdom Exploration. I have a lot of things to discuss about the oil markets, and I want you to understand that everything you read and everything you see and everything you hear is not always the truth, and most of it is garbage. It is purely propaganda to control, not you as an individual, but to control the markets, because greed is powerful. Corporate greed, individual greed, the powers that be, the deep state, the shadow government, whatever you want to call it, they are addicted to power. They have a lust for it. They think nothing more. And you are just a rat in a maze. You're just a number to them. And losing power is their greatest fear. The thing that has the ability to take their power is oil. BlackRock has $12 trillion of assets. Vanguard, UBS Group, JP Morgan Chase, Bank of America, 10 of the largest organizations out there, Citigroup, they have over $45 trillion worth of assets. And all those assets could be cut in half if oil prices went to $200 a barrel and stayed there. It would erode the U.S. economy, destroy it. And so it's interesting that before this latest debate, you know what debate I'm talking about, oil prices were hit pretty hard. The lowest level in 3 years. Why? It doesn't look very good to try to be the leader of a free country if oil prices are high. That's the biggest concern. Inflation's biggest driver is oil. The biggest concern of Americans is inflation, is gas prices. Oil affects everything. And if you don't think the powers that be do whatever they can to control the price of oil. For instance, BlackRock, Vanguard, and State Street, they're the top asset holders, trillions of dollars. I mean, they have a combined, between those three, they have a combined $20 trillion of assets, maybe even more. And they have 70% of the majority voting rights of the entire New York Stock Exchange. And 80% of the world's oil supply is priced on through New York Stock Exchange and the Intercontinental Exchange. If you don't think that they're not controlling oil prices by shorting it every time the price of the barrel of crude goes up, think again. They would rather short oil, losing an opportunity to make money in the billions to protect trillions of dollars worth of assets. They have that power. Listen, the stock market's not based upon truth. It's based upon what you believe. It's not based upon how many sprockets a company sells. It's based upon the good news, the market sentiment. If they have negative sentiment towards your company, I don't care what news you produce. I don't care how many deals you close. I don't care what technology you invent. You're not going to survive. You could have two companies doing the exact same thing, but one company is worth more. Why? Because of information spread throughout the internet, whether it's the news, Fox, CNN, MSNBC, they take their marching orders coming down from the powers that be. If you don't think the guys that print the money, that control the money supply, the trillions and trillions of dollars, and first off, there's $35 trillion worth of U.S. debt. Do you really believe that? Is it 35 trillion? Is it all accounted for? You think they're being honest with you guys? I think that 35 trillion could be more like 100 trillion. How would you know that? How do you know how much money is in circulation? Have you counted it yourself? Or do you rely upon the powers that be to tell you how much money's been printed? I mean, gold hit all-time highs, yet oil prices are floating around the price that it was when the largest financial collapse of 2008 happened. Have you ever asked yourself why? Because oil demand is at the highest it's ever been. Right now, oil demand is at 104 million barrel a day demand. And as of the recent market report this month that came out by OPEC, they're saying by 2025, our world oil demand will be 107 million. Well, Sean, you know, the West, America, they don't have the growth like they do. Look, we've peaked at oil demand at 20 million barrels a day demand. We're not going to grow anymore, guys. We might grow a little more, but it's the emerging markets. The emerging markets, their demand, they're adding an additional 6 million barrel a day demand in a 3-year span. Who's going to furnish that oil? Okay, so let's look at a few things. Let's look at what's going on in Putin's world. Okay, Putin says NATO will be in the war if U.S. or allies let Ukraine fire long-range missiles at Russia. Now, here's the deal. Russia is threatening war with NATO and its allies, America, if we furnish long-range missiles to Ukraine. Now, Putin cannot compete with Ukraine because America is funding the war. If you are Putin, you're not able to receive weapons from other countries, so you are 100% relied upon your ability to manufacture. And you are 100% relied upon the money that comes from your economy, because you don't have a printing press like America. America, the currency is utilized in every country in the world, making its demand and its value very high. Where the ruble, if he just printed like America did, it would crash, worth nothing, destroying his country. So he's 100% rely upon the sale of oil. And so when you're a country that's 100% relied upon your ability, you're a man on your own island, how can you compete with America? And how can you compete with a country that has the support of America? That's why Iran hates America, because America is funding Israel and giving Israel everything they need, supporting them. And that's why Putin hates America, because we're doing the same thing for Ukraine. How can Iran and all of Iran's proxies compete with Israel? And how can Russia compete with Ukraine? They can't. They can't. They cannot win that war. The only option is nuclear bombs. And that's never going to happen. And if it happens, it's game over for everybody, okay? I mean, the second Iran or Russia uses a nuclear bomb, it's game over. We go nuclear, they're done. We already have nukes pointing at them right now. And so they're not going to make that mistake, neither is America. So what's the other option? Oil. Oil alone has the ability to erode Western powers, preventing them. If oil prices went to $200 a barrel and stayed there, it would shut our ability to fund wars tremendously. And it would empower and enrich the Middle East. Russia would become very wealthy, giving them even more money to go around sanctions, to import more weapons, to amass more weaponry, to fight more wars. That's why there's such a strangle on the price of a barrel of crude. That's why there's so much negative news about crude. The largest assets in the world that control $45 trillion worth of assets, the top 10 companies, they control oil prices. So you look at Putin and Iran, you look at the Middle East, they're tired of the Western powers controlling the price of a barrel of crude. They're exhausted from it. And so their only option is to have BRICS come together and cut the West off from oil. That's their only choice in the matter, okay? And so if you look at oil prices, oil dropped, okay, 3 times over the last 20 years, okay? And look here in 2008, 2009, oil prices crashed to $60 a barrel. Now, as you know, we had the world's largest financial collapse the world has ever seen. Of course, oil is going to drop down to 60. And then it quickly recouped to $101 a barrel. Okay, I know in 2015 it dropped. I'll get to that. But if you look at oil prices in April 2020, they dropped down to $23 a barrel for a very short period of time. Why? That was during COVID. Nobody was driving, nobody was flying, and we were in a glut of oil. Our strategic petroleum reserves were filling up. We had global glut of oil, and Saudi Arabia and Russia decided to flood the markets with oil on the backs of the whole COVID nightmare, okay? So obviously oil prices crashed and then they recovered, okay? And so the only year that just doesn't really make sense, there was no COVID, there was no financial collapse. So what was going on in 2016 for oil prices to drop, okay? Well, I'm going to show you this little chart here. Okay, so this is production, U.S. oil production, okay? If you look here, it has production all the way from 1901. In 1901, we're producing 190 barrels of oil. In 1900, we're producing 174. So we increased oil output 9% from 1900 to 1901. 1902, 28% increase. Okay, so as you can see, I mean, one year we added 31% more oil. Massive increases in oil output. Okay, let's fast forward to 2008. Okay, the reason why oil prices went to 100 in today's dollar equivalent, oil hit $200 a barrel in 2008, okay? But if you look here, we had an increase from 1900s and we peaked at 9.4 million in 1972. And then we had a slow decline all the way to 2008, which was 5 million barrels a day. We had a slow decline. So the world was like, okay, America is not increasing their oil output. It's slowly declining. There's not any major oil discoveries, okay? So oil prices went to $200 a barrel, but then we had the financial collapse, okay? Okay. Now, what happened in 2016 for oil prices to crash down to 50-something a barrel? Well, you got to look at what led up to that point, okay? So like I said before, we had a slow decline from the 1700s to 2008. But look what happened in 2012. 15% increase. 2013, 15% increase. 2014, 17% increase. 2015, 7% increase. 9.4 million barrels a day. We doubled our oil output. No country in the world has ever been able to accomplish what we have in a short period of time. And nobody expected it. And what is to follow? Oil prices dropping down to $40, $50 a barrel. Okay. How much is it? Yeah. So oil prices declined to $44 a barrel. Okay. So we were swimming in oil. Okay. But you look at today, the shale is very little growth. Okay. If you look at current oil increases here, okay. So we had, in 2022, we had a 6% increase. In 2023, we had an 8%, okay? But in 2024, 2%. Now, here's what you have to understand. The days of explosive growth, like we saw in the days of 2012, where we were having consistent year-over-year 15%, we produced all the easy-to-get-to oil for shale. And now the reason why you're seeing somewhat of an increase, let me get the U.S. oil output chart here. Okay, so this is from 1920 to 2024. So we've increased from 2008 from 5 million barrels a day and then to here to 13.2 million. Okay, so you look at this rapid growth, this chart, and all of a sudden we're tapering off. Okay, so why aren't we increasing like we used to? Well, number one, we're running out of the easy to get to oil and gas locations. Okay. And number two, the larger shale companies have bought out the smaller shale companies. So there's more capital discipline. They work together. Okay. So they're drilling less. Okay. But they are drilling longer legs. So back in 2012, the lateral legs. So imagine oil-bearing formation, and they imagine them going 4,000 foot sideways into the structure, okay? And then they frack the hell out of it. And nowadays, they're going 15,000 feet sideways, okay? So they're tapping into 3 times the amount of structure. But the thing is that, and so that's why they are seeing the numbers that we're seeing, okay? That's why we're maintaining current oil-filled output. So they're producing 3 times faster because each well that they drilled, they need 3 times the structure. But they're not producing 3 times more oil. Okay, they're producing twice as much oil. So if you're tapping into 3 times the structure and you are only producing twice as much oil as the wells that use 1/3 of the structure, it goes to show you that they're producing less. They're recovering less oil, and the decline is 70 to 90% the first year. So that well that's producing 1,000 barrels a day drops down to 100, okay? So it's a very fast decline, which means that they have to drill a lot of oil just to maintain current output. I truly believe that we're going to start seeing a decline. But the thing is that the days of massive shale growth are over. And the thing that kept oil prices low isn't going to be able to help us anymore. And then we have BRICS on the horizon. BRICS to control the price that they sell their oil. They have 45 million barrels of oil, and they're not going to let the New York Stock Exchange and the Intercontinental Exchange price it for them. They're not going to. They're going to disrupt the system. So I'm telling you, we have a future that oil prices are going to be high. OECD countries and the non-OECD countries, there's a lot of growth to be had there. And you need to take your eyes off the West, off America. You have to think globally about crude. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe, and we'll talk soon. Thanks.